Good morning. I forgot to put on my glasses, so I'm like reaching now. I was like, why can't I see too well? Good morning, Black people in cryptocurrency. We're going to get started with the live stream in a few minutes. Today, we're going to talk about cryptocurrency and taxes because the IRS has a new law that affects those who are trading, those who are holding, and there needs to be some clarity on what you need to pay in this upcoming season. But before we get started, so our guest today is going to be Rebecca Samuels. She's a CPA out of Maryland, and I'm going to invite her in a second. I see she's already there. I just want to go over a little bit of housekeeping. If you're new to the group, please read the pin post. Do not post anything until you have read the pin post so that you know what is approved to post and what is not approved to post. It also has some resources in there for you in terms of the free guidebook that's in the file section, as well as archives of this video after we finished it, if you're missing it at 10:30 Eastern time this morning, as well as any others that we have done. So definitely read the pin post. Those of you who are in the group and have been long-term members, if you see anybody posting anything crazy while we're on the live stream, definitely go to the three dots that are at the top right-hand corner of that post and just report to admin, and we'll deal with it later. Often, if something is so egregious, we just kind of delete the post and the member from the group. If not, if it's just kind of seems like it's a mistake, we'll delete the post and contact the member outside and ask if they read the pin post. And usually it's the case that they have not read the pin post. So definitely we want you to watch the timeline more on this thing. We don't have pre-monitored posts. We want as much of an open forum as possible on that issue. So without further delay, we're going to get started with the technical aspect, and I'm going to invite Rebecca Samuels, who has her own venture, and she'll explain that when she comes on the call. And I'm going to click add and invite, sometimes seconds, and definitely get some clarity on the issue in terms of IRS governments for Americans. Good
Hello.
morning. How are you?
Good morning. I'm doing well. How are you?
Happy New Year.
You too. Thank you.
All right. So let's get started. Tell me a little something about your company and your background before we get started so people have clarity on how to contact you after this live stream should they have further questions.
Okay, great. So, and I'll also do a couple of disclosures while I'm at it because I am a licensed professional. So I need to make sure that I give those disclosures. So pretty much I am a CPA, certified public accountant, and an enrolled agent, which just means I specialize in taxes, and I'm located out in Maryland. My business is called Pythagus. That's spelled Pythagus LLC, registered in Maryland. I'm a single member LLC, and I opened my business about 8 months ago. I want to say it was at the end of July, after working taxes for another CPA for a couple of years. So this is my first time on my own. The reason why I came into the crypto space initially was because of new business, trying to figure out how to gain clients, get myself out there. And I saw a report stating that most crypto users do not report to the IRS, and the IRS was going to start looking more into this. So I said, okay, this is interesting. I'm not too sure how many other accountants are in this area, but why not? And then I started learning about the blockchain and attending numerous meetups in my area.
Excuse me.
Learned a lot more about the blockchain than I anticipated. And after that, I kind of became a believer, I would say. I believe that blockchain technology is the way we are going to operate going forward. Unfortunately, it disrupts a lot of areas, such as accounting, for one, because the way that the blockchain works, I don't really see the need for having an accountant do the work that blockchain could do. Accountants probably will, evolve into something else, or, over watching the blockchain or verifying or something like that. But the blockchain solves a lot of problems. It makes things faster. And I just see this as the way it's going. So I started investing myself, and I am a holder of over 15 altcoins in addition to our main three, in a lot of different groups, investing groups, to learn more as an investor. But what keeps coming back is the tax portion, and that's why I'm here. So it's nice to know that I could tie both of this in, because this is something I really, really like, and then this is also my background. So there we are.
Did you say you had some disclaimers that you wanted to cite?
Oh,
First off?
for reminding me. Okay, so I CPA and I'm an enrolled agent, but I'm not your CPA. I'm not your. So if you need help, or you have questions, or you need advice on a particular situation, I would sincerely ask that you either talk to your tax professional, or if that person is not familiar with cryptocurrencies, you could definitely contact me. There's other tax professionals that are familiar or work with or have clients in crypto. I suggest you go see them for your particular situations. This video will be general information. I will be answering general questions, but if it's anything specific to you and you need advice how to navigate your particular situation, this is probably not the area to discuss that, just because, again, it's personal. Your advice cannot be applied to someone else's, so it's best just to keep everything generally and talk to a professional specifically.
Okay, so the first question was a repeated question, came from the group, and it's probably the most obvious question. A lot of these questions came from a user named Anene. I'm not sure if I'm pronouncing the name correctly, but basically, what is the law? What is the law? What are we required to pay in terms of, and then how far back does it go back in terms of the very first crypto you've ever bought and do that type of evaluation, or is covering 2017, 2018?
Okay, so US Code 26, Title 26 is the area of law that talks about taxes. And you are supposed to pay income taxes, which crypto would fall under this due to the fact that it falls under income. So, I'm sorry, we do have to pay crypto. We're supposed to go back from when you first started, when you first entered the crypto space and you started trading, started making money, started losing money. At that point, you should have either paid taxes or reported losses. If you're mining, that's considered self-employment income. You should be claiming the income from the mining, deducting your electricity expenses, anything else that's related to the business, that sort of thing. So this does fall underneath it.
Okay. And how do people file for the cryptocurrency taxes? Is there a specific tool or form that they should use?
Well, okay, so taxes wise, things haven't necessarily caught up yet. So I don't think, but I don't believe, whichever, tax software you use, TurboTax or any of the others, I'm not sure if they say, do you have Bitcoin? I noticed last year that they didn't. That might change for this year. But again, it's income. So if you're mining, you should be filing a Schedule C and reporting your income. If you are an investor and you're trading crypto, you should be filing a Schedule D and reporting your short-term or long-term capital gains and everything else. And there's a little bit more that goes into it. There's additional forms, but generally speaking, you have your Schedule C for your self-employed income, or if you're investing, you have your Schedule D.
Okay, and I have a related question that came from Eric. If I don't get a 1099, does it mean it is my responsibility to report my gains, my realized gains?
Yes, that's always been the case, regardless of if you get a 1099 or not, regardless of if you receive any other documentation or not. You're always supposed to report your income. So for example, if you are an independent contractor and you've worked for a company doing a small project and they've paid you $10,000, but the company failed to get your social security number and they failed to get your ID, so therefore they can't issue you the forms because they don't have your information. It's still your responsibility to report your income and pay your taxes on your income. So that's the same can be said for cryptocurrency. The exchanges aren't regulated yet. I don't know if it's going to happen or not, but the exchanges aren't regulated. So they're not following everything to the point to give you all the details that you need, which, I mean, as an investor, I would want to know, what did I put into what did I buy the crypto for, my basis, how much money have I made, how much money have I lost. So I would think just for personal information, you would want to track that anyway. But since the exchanges, since the wallets don't provide that information for you, it is your responsibility for you to do it yourself.
Yeah, that was definitely one of the questions on the list. I can't find it right now because I just kind of chicken scratched all of them on a piece of paper, but somebody asked about the exchanges. I mean, there were so many questions, and I was like, okay, how do I shorten this question? One of the questions were, were the exchanges, whether they were U.S. based or just taking U.S. customers or abroad, are they required to report the transactions made by American customers? I can't remember who asked it, but that was the question.
Yeah, and we can come back to that when you see that later
Larry
on down.
had it.
I want to make sure that that point goes home, that this is still unregulated space. We don't know if that will change. I would think it would, but the exchanges, the wallets that are located within the US are in jurisdiction. So I would definitely think that if you're using a US based wallet, a US based exchange, then, if not now, maybe later, or just like what happened with Coinbase, they can be subpoenaed to provide whatever information is needed. Now you have, Binance, you have wallets that are outside of the country. That's fine. They may not fall within our jurisdiction, but there's also treaties between the US and other countries that may come into play. So you just don't know. And I don't see the point in trying to be like a tax evader over $1,000 or $2,000.
Right.
You know what I mean? So that's just my take on it.
Or
But
any dollars. Any dollars. You can't say after watching this video that you didn't know. I had a couple of IRA questions that I'm going to kind of consolidate because Laris, Michelle, and at least one other person asked. So the questions were, can a Bitcoin IRA serve as a tax haven? That was one question. And the other two were related, saying that if you have an LLC, an S Corp, or other business entity, or if you have a self-directed Roth IRA associated with your LLC, can those provide tax shelters for cryptocurrency?
Okay, so self-directed IRAs can provide protection. Now, I try to explain to people, I actually have not dealt with a self-directed IRA. Number one, I'm not a financial advisor in the sense where I sit down with clients and out, different accounts that they can have to, protect their taxes. I'm on the other end where if something happens, if you do a transaction that's not, if you do a disqualifying transaction and that would negate your self-directed IRA, now you're coming to me and we're talking about the tax implications of it. So what I tell people is, please find a financial advisor that's licensed to talk about this area. Find someone preferably that's more experienced in self-directed IRAs. Most people don't know what this is, and this is something I had to learn myself. I didn't know what a self-directed IRA was, but now that I've researched it, I've looked into it, yes, that's an area that you could go. But the caveat to this, and the financial advisor can tell you more, if this is a self-directed IRA, you cannot touch that money at all until you get to a certain age. So if you are coming into the crypto space looking to make some money now and maybe cash out in a year or two, self-directed IRAs are not going to help you. That's more of a long-term thing. You cannot have disqualifying transactions. Otherwise, it negates the whole entire thing and you will pay all taxes up front. So just keep that in mind. Go over all of your options. And I think that's great to be very informed of what is out here and what you could do. But not too many people into this, at least in my opinion, with a long-term thought process. Most of them are coming in saying, hey, I have $1,000 to invest today. What coin is good that I can cash 6 months from now, or what have you?
Right. That's exactly what they're doing a lot of times. I had a question from Carmen. Now, cryptocurrency is also used as a form of currency. So she wants to know, how should crypto donations to 501c3s for not-for-profits be handled by the donor and the organization?
Okay, so pretty much I'm going to say, in my personal opinion, it goes along with what currently happens. It's not a currency, it is an asset. So you're going to be labeling it as, I guess you would really have to talk to how the donor wants to do it. Because with nonprofits, you have donations that can be restricted, and the donor can say, I want $1,000 a year released into the general fund, or I want the money only used for this particular purpose. I would definitely say work with your accountant on it. Cryptocurrency is property, not currency. And even though, it's being used as currency in the IRS's eyes, it's property. So I would just make sure you have
Isn't that a mode switch from, I think Bitcoin is defined specifically by the US government as a currency. So isn't that kind of like a code switch from how it was originally defined versus now how the IRS is now defining it? Because I can't remember where I saw it, but even long before this tax discussion, the United States recognizes Bitcoin specifically as a currency.
Okay, that's very interesting, because everything that I've read so far, again, strictly relating coming from the IRS. I've even gone into the SEC to understand what their thoughts about it are. And right now, some conflicts. I'm not going to say there aren't. There are some conflicts within, but I'm talking about for IRS purposes, it's a property, and that's how they're treating it. And when we're doing the accounting for it, I would also treat it that same way, just to keep everything fluid. I mean, obviously, you're going to have to convert the different amounts to understand exactly the numbers behind everything, because we don't do our financial statements in Bitcoin. But at the same time, the way it should be classified, the way it should be categorized, I'm going to say my professional opinion, as a property, as a current or a long-term asset.
So if someone is spending their property as a currency, I'm sure how they would do the math in terms of handling a tax situation. Because right now you can buy room rentals, you can buy Walmart gift cards. There's a whole bunch of stuff. I mean, it's hundreds of things that you can actually buy directly with cryptocurrency. All of them, Ethereum, Bitcoin. People are spending them now. So how do they figure out what to report to the IRS, or how to create some type of formula to report to the IRS when they are spending it as currency?
Okay, so before I answer that question, I will throw this. I thought it was kind of interesting, just hearing everyone's side point about this. So what I'm constantly being told is that it shouldn't be taxed until it converts back to fiat, right? That's what I constantly. Okay, but then I also hear what you've just said. Well, I'm using my crypto to buy XYZ, which kind of now creates sort of like a loophole. If the IRS said, okay, fine, we're not going to tax Bitcoin until you convert it back to fiat, then people just say, hey, I don't want to tax. I'm just going to start spending my Bitcoin and buying things that I need with my Bitcoin, and then I won't get taxed, and I'll also get all this free money. So I just want to throw that out there. That's why I think a lot of people are upset about it, confused, or everything else, because we have these two conflicting areas of, well, it shouldn't be taxed until it converts back to fiat, but I'm using my Bitcoin to buy XYZ, and especially if it appreciates, I now have more Bitcoin to buy XYZ, and I don't have to pay taxes on it. So now regarding your actual question, there is a comma separated value file, the CSV file, that's located in some, I'm not going to say all because I haven't gone into all of the wallets or exchanges, but if you go into your history, they should normally have a CSV file that you're able to export. And I would highly suggest that people go to websites such as bitcoin.tax or cointracking.info and upload their information onto there to be able to go through and convert all the transactions to be able to get the numbers that you need to go ahead and file it on your taxes. Obviously, if that's what not if that's what you're going to do, but pretty much for the people that want to pay taxes but don't know how because they're using their BitPay card to buy something or whatever have you, that's what I would really suggest that you do. And at the end of the day, again, we are converting the Bitcoin or whatever it is, any altcoin, we're converting it back to dollars to understand the dollar amount for you to be able to report this on your tax return, because you're not going to say, well, I spent 6 Bitcoins and I have to add in 5 red coins, and this all has to get translated back to money. So you're going to need to know exactly at the time you did the transaction, how much was it worth, what your gain is, what your fees were, and calculate all of that in.
Okay. So how, let me just check the list to make sure I'm not skipping someone's questions.
And we have to go back to a question, which is the business one. I didn't answer that earlier, but I wrote it down.
You want to answer it now? You can answer it now.
Yeah, just I don't know if it's going to come up again, but a lot of people have also asked me, can I start a business and just deduct whatever expenses, and then I won't have to deal with long-term and short-term capital gains tax and everything else? And as of right now, it's not specifically included that you can't start a business. I mean, if you're a day trader, this is pretty much your business. This is what you do full-time for work. But for anyone that's trying to see if they can open a business to skirt a way around this, I just think it complicates the situation more, because when you have a business, you now have compliance aspects that you need to have, such as an S corp. You need to have a board of directors. You're supposed to have at least one annual board meeting a year. And even though you'll be able to maybe get away from the long-term or short-term capital gains investments, I think you're now opening up to double taxation in the C corp. To pass through with the partnerships or with the S corp. So now you have to worry about self-employment tax in addition to the federal and state taxes that you would have had to pay. Whereas with investing, you're worried about the capital gains tax, and you know exactly what that is depending on your adjusted gross income and where you fit on that bracket. So it's your choice. As a CPA, I'm not going to advise my clients, especially ones that are strictly investing, to start a business to get away from the short and long term. What I would say is sit down with your tax preparer, do tax planning, talk about your options, look at long-term holds. I mean, I'm not really too sure. I'm an investor, so I'm still learning and I'm trying to understand, but I don't really get the folks that put in $100 on a $2 coin or a 2-cent coin and then sell it when it gets to 5. I'm trying to understand the reasoning behind that, but again, I'm new to the space. I'm new to investing. I have a lot of different coins, but I'm also a long-term holder. Most of my coins were bought a couple of months ago, and my portfolio is seeing the benefits now. I don't anticipate cashing out for another year or so. You know what I mean?
Right. So the IRS doesn't recognize cryptocurrencies, so an exchange between Bitcoin and Ethereum, or Ether rather, as an in-kind exchange. Why is that? What metrics are they using to say that these are different entities?
Well, Section 1031 is what you're talking about, the light kind exchange. And I'm not sure if anyone's really taken the time to read the details of Section 31. I know a lot of people are throwing it out there. Oh, they're like kind. You could use this and get away on your taxes. But there's actual instructions, and the government's really deliberate with everything they do because, for the most part, they don't want any ambiguity. They want people to know exactly what the rules are so you can either follow the rules or not. And Section 1031, in my personal opinion, is no different. Looking at Section 1031, you're supposed to have an item already picked out. So let's say Bitcoin, for example. I have Bitcoin already picked out, and you're supposed to make it in writing known that you are going to exchange Bitcoin for another coin. And then the transaction is supposed to go through a qualifying intermediary, not your accountant, not your lawyer. It has to go through an outside source. And then at that time, the exchange is facilitated. There's an actual process to like-kind exchange that currently Bitcoin does not, or cryptocurrency does not fall under. Right now, cryptocurrency seems more like you're trading stock versus, holding, art pieces at your home and then saying, hey, I have this art piece that I would like to exchange for another art piece. I don't want to pay the capital gains taxes on this art piece right now, so let me defer it using the 1031 like-kind exchange. So I would just really say, as a professional, if a client came up to me, I'm going to let them know up front. I don't advise you do 1031. Now, if you do want to do 1031, go ahead. But now you know that you're at risk, because I firmly believe that this is going to be a highly audited area, in addition to the fact that one trade requires this long form. And if you have 60 of them, then it's going to be 60 of these forms that you or an IRS agent or whoever would need to go through. I personally, again, just don't see the benefit of trying to use 1031. And I've talked with many attorneys. I've talked with other tax professionals, enrolled agents, CPAs, and for the most part, we are all in agreement that 1031 is definitely not going to work going forward with the new tax law change, because they've restricted it strictly to just real estate. But, the IRS also has the option. They did not exclude it. They did not specifically include it. They can go back and say, well, retroactively, we didn't know how to deal with cryptocurrency before. Now we do. And 1031 doesn't apply to anything happening since crypto space started. So if you've used 1031 on any of your prior returns, please go back and re-amend. And that's
Okay.
exactly.
Yeah, I think that it's going this, it may be outside of your realm, but have you heard of anything in terms of the DC area of lobby groups that are kind of meeting and talking about this law and what are other solutions? And just to make people aware, and the reason I say that is because the in-kind thing, like for instance, there's certain things you can only buy with Ethereum. You can't buy direct with Bitcoin. And I'm sure there's a reverse, but it actually more happens with Ethereum because of how the company developed. So they force you to buy that coin to buy something else. So it's not like, okay, well, you could have just bought the Bitcoin that you just had. You're forced into, and as different coins gain prominence, they may control certain areas, because there are literally cryptocurrencies now that are popping up to kind of manage gold trades and everything like that. So maybe if you wanted to buy gold, you would actually have used a gold coin. I'm not saying it's called the gold coin, but I've actually seen them and not really followed them. So I know that this politically is going to come up again, but give us an idea, if you know, of like how the climate is in terms of Maryland, DC area, of what you're hearing.
Seen any as of yet, but again, I am an investor also. So yes, I'm a CPA, but that's what I do. That's my job. I'm an investor also, and this obviously affects me as a person. So I am going to just about everything that I can in the area regarding Bitcoin. I just signed up for something that's going on in February in Bethesda regarding crypto space and meeting other people involved in the area. I don't think it's an issue right now, because people are really just starting to get into it. I think when I came in, there wasn't really too many folks. I came in at about August, and I really didn't see too many people talking about it. It was just one of these things where I was like, okay, well, let me take my time to learn. I'm sure at some point this is going to be an issue. And, I set up all my exchanges and my wallets, and I got everything set up so that I could also learn as an investor and as someone that wants to help investors. And I want to say about the end of November is when things really kind of just blew up out of nowhere. I think Bitcoin must have went really high at that point, or sometime early December. And then I'm seeing a lot more people getting involved in the space and everything right now. So again, not just because I'm not aware and I don't believe there's something going on right now, I think that will happen in the future, especially as more people are being affected, and as both the government and us as investors really understand the technology behind this and how things work transaction wise. I think we're going to see some changes in the future. I definitely expect audits. I definitely expect some issues maybe to go to tax court. Yeah, it's coming. It's coming. I see it.
I have two more questions because I flipped my paper over. Um, Jonathan wanted to know, is it only federal tax, or are you hearing anything about state laws or anything like that? People
Okay,
concerned
so
about paying.
states normally follow federal. I haven't seen anything. I do know on my business page, I posted something regarding how states are treating cryptocurrencies. But generally speaking, if we're talking about the IRS, the states normally follow the federal. They may have their own special laws or anything, but I haven't really seen anything too much. You can also go onto my Facebook page, Pythagus LLC, or just Pythagus, at Pythagus, and I do have an article that I posted on there that I went through really quickly just to see if I saw anything outstanding, but I didn't. But yeah, it's on there if you'd like to read.
Tommy wanted to know, I think we answered this though, or any taxes that you're storing and not actively trading because you bought it a long time ago and stored it, they still have to be pay tax on.
No, just remember what your basis is. Remember how much you paid for the item and the fees associated, because that gets added on to the basis. But besides the basis information, if you bought Bitcoin off of Coinbase and transferred it into a cold wallet, into a hard wallet, that's not a taxable event because the Bitcoin is still in the Bitcoin form. The taxable event comes if there's a gain and you've now sent it to another wallet to buy an altcoin, for example.
Okay, we have one that came, a last one coming on the live stream. Oh, my glasses. Susan asks, I'm looking for some clarity. If cryptocurrencies are personal property and not classified as currencies, the only way it can be taxed is when and if it is exchanged for fiat currencies. Is that accurate?
Okay, so we went over this before. The taxable event comes either when you're cashing back and the Bitcoin has appreciated from what you've paid into it, or you're using the appreciated coin to buy a new coin. So for example, if you have one Bitcoin and you send it to Bittrex to buy Ripple, for example. I know you don't like Ripple, but I'm just throwing it out there because it's the first thing that came to my mind. If the one Bitcoin you bought is now worth more money than what you paid for it, there's a gain. And if you use that gain to buy the Ripple, it becomes a taxable event. So let's say you don't use the whole gain. Let's say you use partial gain. The partial gain is the taxable event. And you would have to work with your accountant, or you could sort it out yourself. But the partial gain would be a taxable event, and you would pay taxes on the partial gain. That there's not a double taxation issue here. Once you've paid taxes on something, that is now the new starting point for your basis. And you want to make sure your accounting is right. You want to make sure your math and your numbers are right, so that you don't end up paying double taxation on yourself. But it's one time that you're paying it.
Okay. If anybody else has any questions, I'm going to take a second because we've had it on here for 30 minutes, and
okay.
Time is money. But
I'm going to see if I know I wrote some questions down, so I want to see if there's anything that I might have missed on here that we could discuss.
Susan says the appreciated coin is still a cryptocurrency based on cryptocurrency value, not fiat.
And that's absolutely true, but it doesn't change the fact that it's a taxable event, because you're able to buy more of the next coin using that gain, which is why, again, it's a taxable event. So I understand. Again, I'm an investor myself. I see it when I buy Bitcoin and then transfer it somewhere else to buy altcoins. I always think to myself, oh gosh, here's another transaction that I need to watch out for, because again, it's a taxable event. And, I don't know what more I could say to soften the blow, because I understand that that's a hard concept. When I first came into crypto space, I also thought that's not taxable. It's not cash. I firmly thought the same way. And then I started going through the limited guidance that the IRS has given us, and they have distinctly said it's a taxable event once you convert, whether it's to cash.
I think what people are most worried about is, one, I have to do this myself, and I've done a lot because came on the scene in 2008. Maybe some of the earliest people I've talked to talk about 2011, 2013 as a starting point. So they're like, how much do I have to go through? I can't even remember what I did. And then there's this other added fear that you're going to put an intermediary person in between saying, well, I'll do this for you. And then all of a sudden we're back to the same system that we were before, where you have to go through a professional broker or whatever, and there's added fees to something that is essentially run by computers that already gives you the information. So in a way, it's almost like people who are using exchanges to like, okay, now IRS, make the exchanges required to have this, tax tool that you have already built in systems like PayPal or Stripe, that you're like, okay, let me sort by year, zip it out, and then I can actually clearly see what has happened throughout the year. So I think that's part of it.
Gonna happen. I think the need or the want or the desire has to be there first for something to come about. The idea has to be there for it to be made. And I think as we explore this space and we identify issues, such as something a couple of months I thought ago was, when someone dies, what happens to their coins? There's an issue with that, because as a tax professional, when someone dies, you're supposed to get that person's last tax return done to close out that they've died, the 1041. And most people don't do that, maybe because they're unaware, but but that's what happen. And in addition to that, as the tax professional, you're supposed to gather up all the person's assets, because even though it's been changed due to the new tax law, you're supposed to pay taxes on your estate over a certain dollar amount. And a lot of people don't know that as well. So it's very interesting to me just how this all comes back to my particular profession. But then also as an investor, I'm looking at it, I'm like, there's a lot of issues here that, the blockchain is great. I think the blockchain is awesome with everything that it's doing and is going to come. But there are now new problems that most people haven't thought of, just due to the fact that this is new space. So the idea isn't there yet. I firmly believe that there are going to be upgrades to different wallets and exchanges to give more information. I think that's going to happen with the ones that are located here in the US, to make it more friendly for the investors, the users, to go ahead and report this information, because this is difficult. And this, unfortunately, and I'll just throw this out there, this is still what I would consider a niche specialty, meaning that not every preparer, not every tax preparer, not every tax professional handles this. So you're not going to find too many tax preparers that are going to say, hey, come to me, I'll do your Bitcoin taxes. And the ones that are charging a lot. I've seen quotes starting at $500 to $2,000, even more if you're day trading, because this is a complicated subject that you have to go line by line by line to, to figure out the gains and what's the actual numbers. We don't have that technology yet. So as an investor, I hope that software developers come out with something soon. I hope the wallets are able to maybe upgrade their exchanges. But two, we're also dealing with, if someone buys a coin here and then it gets transferred here and then they transfer it here and then it goes back over here, there's also a lot of movement that needs to be captured. So this is just really.
So you're saying you get taxed on the move because you could just be moving from one of your wallets to another one of your wallets to your kid's wallet.
No,
I
no,
mean, it's not a
if it's the same coin. You do
right.
want to keep note of the fees and everything else that you're paying, because all of the fees eat away at your gain, is what I like to tell people.
Right.
The eat away at your gain. But if you are buying one coin here and then you're transferring it to Binance because you want to buy 5 other coins, that is now about 7 transactions, one of which is just a move, just a lateral move from one area to another. But again, all these transactions need to be someone has to go through this to say, okay, this is valid, this is actually a gain, this is a loss, this is a loss, and then we have to add up all the numbers at the end and put it on the report. So it's very interesting to me because I know that the whole point of cryptocurrency, the whole point of blockchain, especially Bitcoin, was to get away from regulation, to get away from all of this stuff. And it looks like, again, coming back, because money is being made here, and there are individuals that are not reporting the money that's being made. So now it's getting more aggressive. I personally would think that if more people had reported it than the 800, this would not be on the IRS's radar right now, because they have other things that they need to focus on. But there's just too many people involved. There's too much money being made. There's too many people that aren't following the, US code Title 26. So it's like now they have to put eyes on it to make sure that people are following the rules, I guess is what you want to say.
Yeah. Do you have anything else in your notes? Because I think we've covered, Dave. I'm not asking you a question because we've actually covered it already.
Okay.
He's just mostly making a comment saying that it's impossible to record every trade you've ever traded, but essentially that's what the law says you're supposed to do. So,
and I mean,
it's kind of like,
as investor, I think you would want to do that anyway, but go into your wallets, go into your exchanges, pull up your history, look at the CSV file, export it. You should be wanting to count your own money anyway. Don't have anyone else do it for you. Know what's going on, know how much money you're making, know if whatever you invested in is a good investment or if you're losing money on it. But also at the same time, again, that's why I'm just saying, just keep track of things yourself. There's history, there's files that can be exported. If you're using wallets or exchanges like Ether Delta, you're probably not going to get any information. So if you need to have that information, either you write it down or you take a snapshot when the actual transaction goes through so that you have a copy of it and you know exactly what you did, just in case if the exchange doesn't provide that information. But I think you would want to know it for yourself because you are putting your own hard-earned money into this and you're wanting to see a benefit.
I'm just checking.
And I just went over my notes. We actually did go over everything. So that was quick. I was
I
surprised.
can't believe it because I saw all those questions. I was like, oh my goodness. With all of this effort to identify taxable events on a non-currency, what of decentralization? That might be a rhetorical question.
Yeah, and I understand. Like I said, I'm an investor myself. I totally get it. I understand. But now that you have the information, you have a choice. You could
Yep.
either not report or you can report. But as long as
Figure it out,
you know
export
what the rules
that
are.
thing and,
Yeah.
and figure it out. And then, I mean, is there a penalty if people are doing this kind of step by step and process? Like I was only able to get through, 2017, but I've been doing this since 2013. I'm kind of on my way to going back over all those records because I think what some of the long-term people are concerned about is I've been doing this for years. We
Yeah.
might be new, but they're not new. So there's this
Okay.
kind of
So
fear.
for those folks, I'm not the IRS. I really can't predict what's going to happen. I think everything will be on the table at this point, meaning that every argument is going to be heard. And I don't believe the IRS is out here to get folks. I mean, I know maybe I'm coming from it from a CPA point of view, but I kind of really feel like if people are doing what they should be doing and just paying the taxes, the IRS isn't going to sit up here and try to make your life harder. They actually work with you. If you are behind on your taxes, you can set up payment arrangements. If you haven't filed, it gets a little bit more stickier, but there's always options that can be done. And I don't know. So maybe I just have a biased point of view being on both sides, and I could see both sides. But again, I'm not the IRS. I don't know what they're going to do, but I think for now, all options will be on the table that will hopefully make life a lot easier for everyone else that wants to report, but are either finding it challenging or they don't have substantial records. I do know that if you're not able to prove what you've purchased something for, you may be along the lines of taking something on a zero cost basis, meaning that, if you have a basis, if you paid $500 into something and it appreciates to $1,000, you would only have a taxable event of the 500 whenever you do the conversion. But because
you can report losses too, correct? Because sometimes people just buy stuff that tanks.
Yeah, you can report the losses as well. Up to $3,000 a year, yes, you definitely can. But what I'm saying is, from the taxable event perspective, if you bought something at 500 and you have the documentation for it, and then you cash out at 1,000, you only have a taxable event of 500 that you're going to be paying taxes on. But if you don't have that initial document, the initial document saying that you bought something for 500, and you can't prove that you bought something for 500, then now your basis of $500 would go to zero, because you don't necessarily have the documentation to prove what did you get it for. So that's something to keep in mind. I tell everyone all the time, you want to know how much you paid for something. Just what did I pay for this? What did I start with? Because at the end of the day, it's your money that's being invested, and the gains that you receive, you want to know if you have a worthy investment or not.
What is the penalty for not reporting the currency? Sheila asks. Jail. Jail.
And I'm going to be honest. I'm going to be sincerely honest. There could be no penalty. There could be tax evasion. There could be audits or who knows? I mean, seriously, who knows? This is something that I tell people a lot. You don't know if the next coin you buy is going to be worth $1 million. So your life could change kind of overnight. So if you invest in, I don't know, it's the new year. So everyone is putting up that if you bought this coin with $1,000 last year and held on to it this year, it'd be worth this much. Well, think about that. You don't know what coin you buy is going to end up making you a millionaire if you cash out. So, do what you want at your own risk. You're informed. You can make the decisions that you want to make regarding this. That's your choice. But for me, obviously I'm a CPA, so I'm going to be wanting my clients to report this sort of thing. This is what I'm helping them do. But again, it's your choice. As long as you're aware of what the consequences could be, it could be nothing. You could probably fly in the radar and the IRS won't know who you are. You'll never get caught. But then also at the same time, you don't know if you will get caught. And then now we have, well, you've probably been trying to evade us. We're going to make an example out of you so that other people won't do the same thing. It's your choice. It's your risk.
This was absolutely informative. I mean, nobody in this group can't say that we don't have a resource in you in terms of looking at this and contacting you personally. Because I think you mentioned in another video that you have clients from all over, right? So if people want to.
Have started really contacting me. I actually sat down with an angel investor yesterday, and his portfolio is over $1 million. And he basically told me, look, my life changed overnight. I bought into Ether at the beginning of 2017 when it was like, what, $30? He's now sitting on 1.5 million. And he's like, I need help. I want to cash out my money.
I'm not going to jail. I'm not going to jail.
So I've been getting calls from all over. This is going to be the first of 3 interviews I do this week, which is awesome because, again, I literally just opened my business after doing taxes through another CPA, and I wasn't sure how could I, get clients. And hey, now I have an area where I know a lot about. I'm an investor myself. We can sit here and talk about coins, and then I can do your taxes. So I think it's awesome. I really do.
Nicole wants you to repeat your business again and your information.
Sure. So the business is Pythagus. That's spelled P as in Peter, YTHAGUS. And the website is www.pythagus.com. Best way to reach me, I'm going to say by email or scheduling a consultation. My 15-minute consultations are free. I've been getting a lot of calls from everywhere, so I'm normally booked up, and obviously tax season is about to start, so I'm about to get really heavy busy for this year. But as long as you're patient, I will definitely speak to anyone that wants to talk to me about. I mean, again, you could call me and we could talk about coins. I'm an investor myself, and I like to know that what you think, the next big thing. We could argue about Ripple within reason. Or
we want to say, thanks, James. James, one of the watchers, actually put up the website. You can look at the comments later, but we're getting a lot of great information. Wow, only one FUD. Great. And so again, we always say, we might be aggravated by the law, but we don't want to shoot the messenger. And this information definitely needs to be repeated over and over and over again, because we know, especially in our community, a lot of times we're the ones that are dragged out. We have a long history of people, Red Fox, you name it, they got dragged out. And we don't want to be one of those people as we, navigate ourselves through this space as well. So thank you, Rebecca. A lot of thank yous from Shalita, Nicole, and James, and a lot of people you can look at later. Definitely reach out to her, and then let's keep the dialogue going. And no, I still don't like Ripple, but that's okay. We have an open forum for a reason. We want people to banter back and forth. That's what a discussion group is about, as long as people just don't lose their minds. So Suten says Madase, I say, what language is that, Suten? Because I think he's maybe from another country. But anyway, I take it that means thank you very much. Okay. And you rock. You got a you rock in there too. All right. So thanks a lot, and take care. We're definitely going to save this for our archive. It'll stay in the group for about a week, and then we'll release it to the wider Facebook community. Okay? Oh, it's Twee. The language was Twee. Okay, got it. Take care.